Good morning, everybody. My name is Chad Lupkes. This is Total Growth Investing live stream for Sunday, September 27th, 2020. It is 9 a.m. I'm reminded of Good Morning America with Robin Williams. Good morning. It's 0900. What does the O stand for? Oh my God, it's early. No, it's not early. It's just we were up late. But that's fine. How's everybody doing today? Let me know if you're watching. I know it's an earlier time than usual, and this one's going to be for an hour time slot because Torsten wants to go live at 10 a.m. Pacific. 10 Pacific is 7 o'clock his time, and he's going to be going for about an hour and a half. Frank, hi. This week was very bad for me. Is that because the markets were red? ACIU plummeted. It will recover, just a big hit. Yeah, well, let's start out with that then. I do have some things that I do want to talk about, that I want to cover, some concepts specifically about investment strategies, but getting right into it, let's move this over to the side and see what happened. ACIU. Hello, Matthew. How are you doing? AC Immune. Ow. Let's zoom in on that a little bit. Ow. Yeah. What happened? Let's see. Flunks Alzheimer's studies. Shares plummet 48%. Yeah. Ouch. That happens. So what do we got? We got a healthcare company working on biotechnology, therapeutic and diagnostic products for the prevention, diagnosis, and treatment of neurodegenerative diseases associated with protein misfolding. Okay, that's niche. That's a deep dive. Wow. Well, hopefully they'll be able to get things back on track pretty soon. They've been doing okay. Relatively new company, though. Looks like their IPO was in September of just last year, so they got 1 year of history. New companies like this, especially in healthcare, have a tendency to do this. So that's just the reality. Let's see. They have a nice pipeline and they have cash. Yep. Okay. Well, hopefully they recover. And if you zoom in really close, yeah, hopefully they'll recover pretty quick and get things back on track. Good luck. All right. So what do I want to cover here? That's the first thing that I wanted to cover. I think I wanted to talk about adoption curves and how it evolves a strategy. So this is two ways of looking at an adoption curve. This is the market share over here, with the red being new users and the blue being market share in total. You can see this curve presented for technology. You can see it for new cures to disease. Like right now, the COVID treatments that are coming out are somewhere down here because they are just coming out. You can think of it in terms of cell phone adoption, television adoption, and other technologies. And I wanted to show this because this is one of the ways that you can look at investment strategies. It's one of the ways that I look at it anyway. If I want to get extremely good gains, I want to find an industry or a particular stock that is just coming out with their product or service, something brand new. And that's the goal for so many investors who are just joining the market. They think that everything can be found down here and that they can ride it to the high and then live off the dividends at the top. And the problem with stock advisors and articles from the Motley Fool, from other places, is they're making you think with their advertising that these companies are down here, when in reality, they're at a very different place. Let's look at this article from the Motley Fool. Payouts of infrastructure giant Brookfield Infrastructure, Realty Income, and pipeline operator TC Energy. These are high dividend yield stocks that they do a review on. But if you look at it in terms of actual adoption curves, you're not going to see what they're advertising here. Let's look at some of these stocks. BIP is the first one. BIP, Brookfield. Okay. So if you're looking at momentum, and I might be wrong about this, but who knows? Let's take it back 10 years, and you can see this was a pretty good adoption curve here, so to speak. They grew really well from 2016 to 2017, had another crash. This was, I don't know, maybe due to the tax cuts, but whatever, but then COVID hit. If you zoom back in again just to 5 years, their recovery from COVID has not been that good. So what is the article saying about BIP? Not a whole lot. New investors look at headlines like this and they think that, without really digging into it, that they should be buying these. Let's compare these three. So let's look at Realty Income. In addition to that, on this graph, how has that been doing? That's the red line. Over 10 years, they got hit really bad by COVID and again have not returned. And the last one, TRP. TC Energy. Oh, no, that one's nice. 169 over 10 years. So how do these rate? Tell me what you think. Let me know what your thoughts are. Again, I didn't have too much going into this one, into this live stream. So I'm running off the cuff. Let me know what you think about this idea. You do want to find things over here, but I'm interested in finding stocks that are somewhere in here. And if you're looking at definitions of dividends of investment strategies, then let's see, where is that? Investment strategy. Wikipedia had a whole article listing a bunch of different word phrases that I kind of wanted to look at. Momentum trading and dividend growth investing, I have basically combined into total growth investing, because I'm looking at what stocks have a really good momentum over 1, 3, 5, and 10 years. And I'm looking at the same kind of data for dividend growth. And if you combine them, or if I combine them, I'm hoping to find stocks on this curve that are here in the adoption curve, that I won't have to switch over to other stocks later, because the dividends will be high enough and growing fast enough to be able to pay my bills after I retire. Let's see, what else did I want to talk about? Here's another article from Investor Place, where they're highlighting companies that they think in the industry of artificial intelligence are down here, at least within that segment of their of their market that will grow really well. So which ones are we talking about here? Alphabet, which is Google, Nvidia, IBM, Yext. I don't know Yext, and I don't know Baidu. I've heard of Baidu, but I don't know Yext. So I want to look at this one, YEXT. Relatively new, not even a 5-year history. Very volatile. Interesting. And any dividends? No. Too new for dividends. And too small, maybe? Market cap 1.85 billion. So not super small, but not in the tens or hundreds. What else we got? Baidu, BIDU. Decent price, decent market share, market cap, I mean, 42. How have they been doing? Yeah, not terrible. Well, I spoke too soon. They peaked in 2018 and they've been crashing. Do they pay a dividend? I don't know. Nope, they don't pay a dividend. So artificial intelligence is just one other example where it's headlines flashing and everybody knows what artificial intelligence is and they want to catch it down here. What are we doing in the comments? Nothing. Who else is watching? I see Frank. I see Matthew. Okay. I want to do some updates to my TGI list. Mostly I'm waiting for interaction. My strategy right now, total growth investing, combines dividend growth and on internet. There it is. Combines the dividend growth numbers and the price performance numbers to give me a ranking score. There were some articles here that we could talk about. So Tony, welcome to the group. Don't know if you're watching, don't think so, but Stag pays 4.79% dividends. It's TAG. I'm pretty sure that this is on my list. It doesn't have a complete 10-year history, but this is nice performance over 5 years, so to speak. Almost a full 10, but not quite. It's been basically keeping up with the S&P overall. It's recovered from COVID, not maybe completely, but over 5 years with the dividend that they pay, that's nice. Speaking of dividend, how are they doing? 4.79. Payout ratios mature. It's pretty high. Growth rate, this is what holds me back, because I really want to see a higher growth rate than this in a stock that I'm investing in now. This might be an income stock with that yield, but if they're less than 10 years old, you really want to see growth. At least I do. Hello, Brandon. Good to see you. I would think Nvidia is a solid buy. Yeah. Nvidia has been doing really well. Let's bring that up. The price is high, but the question is it worth it? Yield on cost is going in the right direction. The further back you go, the higher it goes. So it's kind of volatile here. I think this was the .com bust. How's it growing? Really well. 4.92 for 1 year, 9.13. That's something to write home about. A total return of over 4,000%. Wow. This is a high flyer. Let's see if it's worth that. So let's go to dividend stock cash. NVIDIA. Cash flow expected to be really nice. That's impressive. Assets are going up. Let's see what the valuations are. I would say that's overvalued. So if anybody's new, this is Dividend Stock Cash, which is a website that Torsten is putting together and has been maintaining in Germany as Aktienfinder.net for a while, about 3-4 years ago. And then he launched an English language version. The black line is the stock price. Let's get rid of this stuff so I can bring it in one at a time. So black line is the stock price. It's very similar to the Seeking Alpha graph. It's the same graph. Let's bring in earnings per share over time. This is what's reported by the company in quarterly reports. Adjusted earnings per share takes into account one-time expenses. So adjusted earnings per share, you can see, is better. How about operating cash flow? Is expected to go up. Anything beyond today, because this right here is today, you can't estimate what the stock price is going to be, but you can look at the estimates from the experts and see what they expect these numbers to be over the next 2-3 years. So this projection goes out to the end of 2023. You can also see dividends and if it's going to continue to grow. And then he does fair value calculations compared to what the stock price is with the green shaded graph. You can see the direct correlation between the fair value based on PE and the actual earnings per share that are reported. So let's bring in these two again and say, what is it now compared to what the fair value is way down here? So while NVIDIA might have been a fantastic stock to buy right here, it's way overvalued right now. If we wait many more years, these might eventually catch up to the current value of the stock. But if you're going to invest it right now and then it crashes back down to fair value, you're going to lose. You're going to lose a lot. And nobody wants to lose. So at least based on what I'm seeing here, I would not buy NVIDIA unless you think these are wrong and you think that the fair value is somewhere up here. That's up to you. But I'm not seeing that. Let's see. I have some other requests. Hello, Ken. ASML and ITB. Yeah, I can do that. ASML Holding. It's actually one of my favorites. One of my favorites right now in the semiconductor industry. So again, let's take that out. Again, right now they're overvalued. They recovered really well, but this is just the last couple weeks of the downturn, the slight downturn that we've been seeing in the market. The fair value numbers are interesting. Looks like by the end of 2023, we could expect these fair value numbers to come back up above price. So who knows what the price is actually going to do? Might go up, might go down. But if you bought it here, and we invest for the future, we don't invest for today. If you bought it here at 307, it could go up. Let's take the median of these two. Hello. There we go. Okay, that's the top, whatever. So we might see some capital gains if these fair value numbers pan out, and if the price matches them after that period of time. We'll see some dividends, and they do expect the dividend to continue to grow like it has been growing since it started, since this data started anyway, back in 2010. I like ASML. And semiconductors are going to continue to grow because we're digitizing the entire planet. So there's that. What's the next one? ITB. Is that on here? Nope. All right. So we don't have everything on this. Let's look at what this is. ITB. Home construction. It's an ETF, which is why it's not on Dividend Stock Cash. That's nice. I like that. How about dividends? That's really nice. That's really, really nice. Do I have that on my list here? Let's go to what if. Clear out yesterday's news. ITB. Am I following that? No. Doesn't look like I am. But based on what I'm seeing here, I probably want to. What are their holdings? It is an ETF. Consumer cyclical, industrials, and basic materials. DHI, DR Horton, 14% of the holdings. Yeah, they're a home builder. That would make sense. And DHI is one of my favorites. DHI is actually right now number 3 on my list, and it's the one that I'm buying. So this is a good find for home construction, especially with the COVID nightmare. People are moving out of cities. This might be a good time to get into it. How are they doing momentum-wise over time? Matching the S&P mostly, but they've recovered really well after COVID because people are buying homes. This one's a good find. Thank you. Cool. And the price is reasonable. $54.19. All right, let's see where this lands. First off, I need to figure out which one I want to replace because I keep 673 stocks on my list for random reasons. No, other way. So what's the next one that I think I want to replace? iShares Europe. Very low growth, if anything. Low history. That's one of the reasons why they're so slow. Yeah, this looks like a good candidate to get rid of, but let's actually run the numbers and see what happens. Hey. Hello, Puka. cat's exploring and making noise. Let's see. Current dividend. I don't need to update that. Like I did this just a couple days ago. Semi-annual. Dividend growth. 4.65, 778. How about momentum? Yeah. 2, 7, and 6.1. Probably still at 14. Yeah. All right. So I can replace that. Don't break anything. Please. He is the one that I want. So let's see. ITB and 0.0511. They pay quarterly. They are an ETF, and they are into home builders, ratio, dividend growth. 16.62, 23.07, 20.33, and 11.68. And momentum, eight, 98.17, 8. Wow. 32. Total return 377.02, and average 4-year yield 0.46. Now, a lot of people would look at this number and go, it's not worth it. I can sort of understand that, but I don't agree. For my strategy, if I can catch something that is paying a really low dividend, there's 2 reasons why somebody pays a really low dividend. Either the price has gone really high and the dividend is steady or growing, or they're just starting their dividends. For ITB, they're not just starting their dividends. Let's look at history. They've been paying their dividend going all the way back, and they've been growing it back since the financial crisis, starting in 2013, 2014. Sort of haphazard because they're an ETF. They are dependent on their components and the dividends from those sources. So that's why it's kind of volatile. But you can see a growth trend. If you go over 5 years, yeah. And the numbers on the dividend growth chart here break that down into annual numbers, and you can see since 2012 they started building back and doing really well. So that dividend yield doesn't bother me. It's hard to calculate a payout ratio for ETFs. If anybody knows how, that's great. What's their next dividend? ITB. So payable in June. So they haven't announced the next one yet. Is it semi-annual or quarterly? It's quarterly. Oh, and this was from June of 2016. So that's not accurate. Let's see if we can find better information. I like the NASDAQ for this. ITB. Dividend history. News headlines, press releases. Nothing. Well, they have declared it. It's just not in the news. Ex-div date was the 23rd, and the payout date is going to be the 29th. If you caught it, good job. But right now, it is at 32 on my list. I think is on the first page. Yep. Good catch. Thank you very much. That's awesome. Thank you, Kenneth Williams, for that. I appreciate it. Let's see. I do have a website. Very simple, totalgrowthinvesting.com. I'm not a professional designer. This is just a simple JavaScript tree menu thing that I've been using for 20 years. There's a link to the Google Sheet. You can either use it here on the website or go into Google Docs itself with this link. You can read a deep dive of where the numbers come from and how the ranking system works. You can share with that tiny URL to get more people looking at the list of stocks. This is all free. I don't charge for anything that I do because I'm mostly doing it for myself. This is my watch list, and I am buying from the top of this ranked watch list. So if anybody else wants to get ideas from my ranked watch list, that's fine. That's great. Let's see. Does this mean that most of the stock market is overvalued? You hear that a lot, don't you? You hear that in the news quite a bit. And honestly, I would say maybe. Let's see. Let's look at the Dow Jones. Over 10 years. Are the Dow Jones 30 worth this? I don't know. It's a nice return, but you'll find all kinds of answers to that. I don't have a quick answer. Let's look at some of the, I want to look at stabilities. So ranked by stability metrics, let's look at some of these top ones. So Fastenal, I would not call that overvalued. It just depends on what you're looking at. J.M. Smucker, I would not call that overvalued. You can't really answer that question looking at overall markets. You got to answer that question one stock at a time. Is it overvalued? If you're looking at the high flyers, Facebook, Google, Apple, Microsoft, and all of those, then maybe. But remember what I said about adoption curves? If you're catching something flying really high, or even the ones up here, they might be overpriced compared to fair value, but those aren't the ones you really want to be investing in anyway, because their growth, at least for me, is not what I want. Where were we? Huntington and Gulls. How is this? That is undervalued. Well, at least according to dividends. There's some potential there. T. Rowe Price, pretty much at fair value right now. How about Intel? Even Intel's not, I mean, they were flying pretty high over here, but right now, not terrible. And when Intel recovers from the slip up they had with the 7mm or 7nm, then they'll come back. Here's one out of Germany. Not overvalued. Lots of potential to grow. Here's one out of Canada. That's interesting. Oh, I see, because they finally got numbers released for adjusted earnings per share. But the fair value based on EPS is a little higher. How about Tractor Supply Company? That's pretty much at fair value right now. So I think, Brandon, the answer is no. Oh, and you couldn't see that. Okay. I do want to do some updates, but I also see some more questions. IDIV. IDIV. The dividend fund, huh? That's a red flag. IDIV is going down. Yeah, yeah. That's volatile. They've only been paying for a couple years. What's their summary? They're not showing me a whole lot. What is this? Holdings? Oh, bonds. Yeah, I would not touch bonds personally. Good luck if you do. What's next? SDEM. Emerging markets. Emerging markets are in the red. Not good. Yeah, this one peaked in 2018, has been going down. COVID did not help, and they have not recovered. I do this comparison first on most things, because I want to see if I had invested in SDEM, what could I have gotten versus putting the same investment in SPY, in the S&P 500. So in this particular case, I would not have wanted to invest in this, because I'm looking for portfolio value, and this is not giving it to me. What's next? ALTY. Super dividend alternatives? Sounds like hype. Pretty much hype. Here's the crash. They have not recovered. They stopped keeping up with the S&P around 2017. They don't have a full history. What are they holding? Pretty diversified. When you're investing in funds, you're not investing in the companies. You're investing in the management. You're investing in the people who decide to buy and sell. Let's see. Give me a better one from this list, from their peers. Multi-assets. Let's look at this one. That's not good, and it's really, really young. What do they hold? They don't say. All right. Yeah, I'd stay away from that one. Let's see. SPFF. Okay. Super Income Preferred. Sounds like more hype. Yeah. I mean, let's look at the dividends real quick. 6.13 yield. That's fine. Which means it might be an income stock. But then again, maybe not. Look at that. This is their entire dividend history year on year, and it's been going down. It's been negative the entire time. So super income is not true, at least not from what I'm seeing. Let's dig into the actual history. Here's their actual dividend payouts, and it's been going down over time. This is a dividend trap. This is a bad dividend trap, because they try to entice people with a high yield, and they try to entice people with a fancy word, and it just doesn't turn out to be true. Monthly? Meh. Monthly dividend stocks do not earn as much as quarterly dividend stocks. They say that with the math you can compound it, but you can't compound negative growth. It just doesn't work. And I got caught with one of these. I got caught with a couple of these. Two of them are not there anymore. But let's look at this one. It's like, what's the dividend yield? 6.71. Sounds great, right? It's monthly. Sounds great, right? Look at the dividend growth. Yuck. Dividend history. This is a downtrend, and this is COVID. Okay, they had something good going for a long time, but it disappeared. Their payments in January went from 1.0 down to 0.017. Okay. These are the quarterly payments. You can see the spikes, and they're not making the income. They're not making the revenue to be able to pay those dividends. But what about that yield? To heck with the yield. I don't want a piece of junk like this in my portfolio. I'm sure the people behind it are good people, but you know what? I wouldn't want this. Yeah, they are fibbing on the divs. And it's not fair to the new people who are coming into the market. Let's look. SRVR. A real estate ETF. Really young. Less than 3 years old. Nice. Some possible. They pay quarterly. Dividend growth over 2 years. Well, that's kind of hard to see. They're too young. Good luck. Holdings, real estate. American Tower I like. They've been doing really well. 444. Here's their chart. I want to look at some of my high flyers. My top 10. SMH. This is an ETF that is focused on the semiconductor industry. These are some of the best stocks out there right now. ASML we already looked at. Texas Instruments is one of the first ones that I ever bought back in 2000. Taiwan Semiconductors, incredible. NVIDIA we already looked at. Intel. 649 over the last 10 years, and it's been consistently green. Except for the COVID. And actually they've recovered completely from the COVID. What about dividends? Nice yield. For an ETF that's flying this high, that's really nice. But look at that growth rate. 92%. And year on year, 152%. And they're only at 169. It's expensive for somebody new, but it's worth saving up the money to get that. And it's semiconductors. We're getting into the Internet of Things. We're getting into the blockchain world. Everything going digital. I think semiconductors are going to continue to sell like crazy. And a lot of their holdings, these are the companies that make the machines that make the semiconductors, and the semiconductors are component parts in everything that's coming out into the market right now. GPN. I'm going to look at this one too. GPN's momentum has been incredible, and they've rewarded their shareholders significantly. Let me show you what I mean. They had a steady dividend of 0.01 and then suddenly jumped it up to 0.195. They did a merger with another company, and that merger really paid off. Global Payments is a global payments company. They will be a facilitator for transactions for MasterCard, Visa, American Express, any of the big brands. They are a middleman for all of those transactions. And global trade is going gangbusters, and it really is. Their dividend growth, well, this is that jump from 0.01 to 0.2, 2,000% dividend growth. Year on year, 462.50. So from 0.04 to 0.225. I got in early this year. DHI, we've also already talked about this one. Home builders. Dividend growth has been fantastic, 20%. Momentum, green across the board, except for the last month, but we've seen some fluctuations over the last month. They recovered from COVID and then took off for the races. Vanguard Information Technology, EGT. 500% over 10 years. Dividend growth is absolutely beautiful. 20% across the board. And then we've got Tencent out of China. In the US, it's an ADR, so I haven't invested in it. But dividend growth, their momentum, 1,500%. Green across the board. An investor's dream. I don't know what that spike is, whatever. They had a peak in early 2018, and they've just surpassed it. This is COVID. It certainly didn't slow them down. question is whether they're overvalued. And on dividend stocks.cash, you can answer that question. The answer is no. At least not if you look at the estimates. Buy it here. See what you've got. 610 capital gains expected or estimated. Let's look at some of these others. DHI. Here's their fair value. It's actually higher. Nice potential gains there. Especially with people moving out of the cities. GPN. That's useless. So are they overvalued right now? Yeah. But we don't invest for today. We invest for tomorrow. Let's look at the best estimate. 257.31. There's a lot of potential there. I would not say they're overvalued because they have the potential to make up for lost time. SNSR. Let's see what that is. Internet of Things. Ooh. That's pretty solidly connected to the S&P. What are their holdings? Tech. Not a whole lot of household names here. Interesting. Very interesting. They're not yet 5 years old. They do pay a dividend. It has been growing. Digitization of the world. This might go somewhere. Returns haven't been super spectacular yet. We'll just have to see. Michael, let's see. CPB. Campbell's Soup. Absolute staple. Opportunity cost, if I had bought back in 2017, I would not be happy. How are they doing now? Keeping up. They're a staple. How's their dividend doing? Steady. Slow growth. Mature. Not horrible. Steady payments. Looks like one special. Not bad. But the growth could be a lot better. And if you look at the S&P, if you look at it compared to the S&P, yeah. They could recover, but that wouldn't be on my list. What was the other one you said? GE, General Electric. General Electric dropped their dividend to a penny. back in December of 2018. And that made them very unpopular. If they can get their feet under them and come up with a way to boost that dividend back up to what it was, because they were a fantastic company up until the Great Recession. Then they tried to come back and it didn't work. If they can come back from this, find a market, get market share again, then they might be worth looking at least for me. But right now, no. I don't see that as going up. All right. Torsten will be on at 10 o'clock auf Deutsch on his channels, on his German channels. Thanks for interacting. Oh, really quick. I missed this one. EMQQ. Really quick. Emerging markets, internet and e-commerce. Okay. That's nice. What do they hold? Some household names. International. Nice. Dividend is okay. Growth is okay. Looks like it's haphazard though. Yeah, they didn't pay anything in 2018, only one in 2019. They're an annual payer. Where are they? Communications focused. Emerging markets. Interesting. Good luck with this one. Maybe some potential. But because they're international focused, dividends are weird outside of the US. We have a very dividend culture for quarterly payers, for semi-annual payers. In a lot of places outside of the US, it's annual or whenever they've got the capital for it. Good luck. All right. Thanks for watching, everybody. This was just kind of off the cuff, but I do want to go live on a more regular basis, and I am working on trying to get my videos on YouTube back up to speed. I will see you guys later. I'll see you guys next week.